There are a few stocks we're watching very closely this year, and XPeng is one of them. XPeng is one of those stocks that quietly starts acting better before people start really paying attention. And if you've been watching EVs at all, you've probably noticed that most of the space has been a mess. Margins under pressure, price wars, weak demand headlines, and yet XPeng has done the complete opposite. As you can see here on the chart, prices started to trend, volumes picked up, and relative performance versus other Chinese EV names has improved. That's usually the first signal that something underneath the business is changing. Before we go any further, it's important to clear up what XPeng actually is. XPeng isn't trying to be a low-end EV manufacturer that competes purely on price. They're positioning themselves closer to the technology forward end of the market. Software, autonomy, smart driving features, but still on a price point that works in China. And that matters because China is not a niche EV market, it's the EV market. More than half of new car sales in China are already electric or hybrid. So growth isn't about convincing people to buy EVs, it's about who you buy them from. And one thing that caught our attention that points to the strength of the business is deliveries. XPeng delivered roughly 430,000 vehicles in 2025, which is more than double than the year before. And that growth wasn't just one quarter wonder, it accelerated throughout the year. A pushback that a lot of people have when talking about Chinese EVs is that it's all price wars, and that's fair, but it's also incomplete. XPeng has been improving vehicle margins while growing volume, which is not what you want to see if growth is purely discount driven. It's just better cost control, platform efficiency, and product mix. And importantly, XPeng isn't just selling cars, they're also building a software layer on top of them. That's where this gets interesting. A part that the market has already started to price in is that XPeng has been very explicit about shifting towards what they call physical AI model, meaning AI isn't just a feature, it's embedded in how the vehicle operates. They're developing in-house AI chips, autonomous driving systems, and a smart cockpit software that improves over time, and that does two things. First, it differentiates the product in a crowded market, and second, it opens door for higher margin software revenue down the line. So you don't need to assume full autonomy tomorrow for this to matter, because even incremental software adaptation changes how the market values an auto company. And another unappreciated part of this story is infrastructure. XPeng now operates around 3,000 self-run charging stations with more than 1,000 added in just the last year. And that's not a nice extra. It's lower friction for buyers and increases brand stickiness. When you look at AV adoption, convenience matters just as much as specs, and companies that control more of the ecosystem tend to retain customers better. XPeng also isn't limiting itself just to China. They've been steadily expanding into Europe and are planning production in Southeast Asia, including Malaysia. This is a big deal because it diversifies revenue and reduces reliance on one hyper-competitive market. You don't need global dominance for this to matter, you just need optionality, and optionality is exactly what growth investors pay for when execution starts to show up. Something we've also been watching that's really interesting and worth mentioning, not because it's going to drive earnings tomorrow, but because it tells you how the company thinks about the technology and optionality, is XPeng's aviation unit AeroHT. It's on track to begin production of what they call the Landcraft Area Carrier in 2026. The dedicated manufacturing facility is about 120,000 square meters. It's a large site and it's designed to produce up to 10,000 units a year. What makes this interesting isn't the flying vehicle itself, it's the structure. This would be the first mass production line for a modular flying car, meaning the aircraft actually folds out the back of the land vehicle in a matter of minutes. XPeng has already secured over 3,010 orders, which tells you there's real demand interest, even if this is just early stage. Now let's actually have a little look at the stock itself. As you can see here, XPeng has started to outperform peers on a relative basis. That's usually how institutions start building positions, not at the top, but when fundamentals improve and price confirms. It's also worth noting that XPeng still trades at a valuation that implies skepticism. The market isn't pricing this as a flawless execution story, which is actually what you want to see if things continue to improve. Now, this isn't a risk-free trade. Competition in China is brutal, pricing pressure hasn't disappeared, and execution has to stay tight. If deliveries stall or margins reverse, the market will punish it quickly. But that's also why this setup is interesting, because the upside comes from continued execution, not from blue sky assumptions. Now, of course, there's many more stocks we'll be looking at this year. We'll be watching the crypto market very closely, and we'll still be watching commodities. So if you do want to join the daily conversations we have about macroeconomics and all different kinds of markets, get in the free Discord. Pro members also have access to TradingView indicators, more in-depth conversations with our technical and macro analysts. You can also follow us on X, and if you did like the video, please leave a like and subscribe.